We got another data point for the Fed to look at. PPI came in today. Headline, not great, but if you dig a little bit deeper, the Fed may be happy with that. We'll discuss all of that and much more today on Money Never Sleeps. Welcome back, everybody. Thank you for joining us. Randy, good morning. Happy to have you live. If you have not done it yet, you know the drill. Hit that like button, subscribe to the channel, and remember, nothing that Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kevin, we're not going to do a live show yesterday. Combination of StreamYard not working, and I had a crazy ass 2-year-old who I had to take care of during nap time, who just would not stay down on his own. But it's good to be back with you live today. A lot has happened since we saw each other on Monday. How are you feeling about the state of the markets?
I'm doing good, man. I would go for a nap right now if I could, because
Oh
I
man.
think I think we're kind of going into this part in the market where it's very easy to be fooled, and the markets just don't know which way it's going to go. Right? I was kind of talking about the fact that the data is probably going to be contrasting yesterday in the episode. I said that the PPI is going to be very different from the CPI data, which it kind of was. Right? We got everything at expectations. Some things were less than, some things were barely a little bit over. But for the most part, it kind of showed that the producer prices aren't increasing significantly at all. If anything, they're kind of staying in line with what they're anticipating. Um, the fun thing is, how are the markets going to take this going into next week? Because we do have OPEX. I think we have a bit of a rally on our hands for the next week or so. We're kind of seeing it right now. Maybe I'm wrong. Maybe I'm wrong. But I think there is no reason for them not to buy this market off of that data. And it could cause a pretty good squeeze just going into OPEX. And then maybe after that, we could be in a very different place for this market. So I'm very happy with how the market's reacting. It seems like it's actually reacting normally now. Bad news is bad news. Good news is good news. So that's kind of a good thing to see, because once we do get that bad news that does come in, might be a little bit scary on the way down.
Yeah, it was a mixed bag with the PPI report today. We saw the headline number come in quite higher than previous month, 2.1% year over year versus 1.6% the previous month. But when you dive deeper, the forward looking stuff came in better than expected. Some of the data points that the Fed will look at, and that will be reflected in the next PCE reading, which I think is not until the very end of this month, and that'll be before the next Fed meeting. So overall, not terrible, and the markets are responding favorably. We see tech going absolutely nuclear today. Nvidia up 3%, Apple up 3.5%. You have a few other ones in the high ones, low twos as far as increase in the market. Crypto having a better day than expected. We saw a big drawdown on Tuesday, but it's bounced back up ever since and kind of recovered most of that loss. So really interesting spot. One day, bonds are the safest place to be. The next day, it's risk on again. This market is it's kind of like my kid. He's a Sour Patch Kid. Someday he's sour, someday he's sweet. And that's how this market is right now. It doesn't know. It's like a moody teenager. No clue what the fuck it wants to do at any given point.
Yeah, not at all, right? But again, then there's signs that are like, is this what we should be doing? When you look at like gold, or you look at oil, and you look at some of these commodities that are just getting out of hand in terms of price, it's like, what's happening here? Why are we risk on when some of these things are just absolutely melting faces on the way up? So I think this market is very confused, and that's kind of a fun place to be, because we're at what could be the end of a move, and it could also be a place where a lot of people get caught off sides. I do want to show one thing real quick, because I've been talking about this like crazy, but I think it's really noteworthy that we talk about this, and that is the VIX. And maybe this is my. Remember, I was bullish in the dollar for the longest, which also was kicking ass today. But I got to show this VIX, because once again, this level, this trend line that we're finding resistance on, this resistance line, we went right up to it, we wicked down. Now we're below the 200 EMA on the daily, right? And I said that there was a good chance that we could get rejected. We could have one last crush for the VIX to the downside. while kind of equities rally. And I said yesterday too that with earnings coming up soon, I don't anticipate earnings are going to be great. It would make no sense for them not to rally into this last OPEX before earnings, because that would just complicate a lot of things too. So I think
It's
that we could.
wild. So real quick, the VIX, that wick up on the daily for the VIX, that was right when the PPI numbers came out. So it's just
Yep.
it kind of emphasizes that point of like people saw the number and they reacted and then they dove into it and were like, oh, okay, this is better than we thought. So like, that got all the way up to what, just over 17 and a half. Like that's a big move on the day.
Yeah, I wish I was able to take advantage of that at the open, but I was sound asleep. But yeah, this is kind of what I was expecting, right? This is showing you that you could see a really big VIX crush going into next week. I think that we're probably going to start getting some closes below the 200 EMA. Doesn't have to, but I think it's likely. And I think we're going to try and find some support maybe around 1416. Now, what would be really interesting is if we get crushed below this. If we get crushed below that, I think that as long as we stay above, what is this? 1242, I think we'll stay well above that. But if we stay above this range here, I think that there's a good chance that not I'm not saying the next day or something like that, but within 2-3 weeks, there's a good chance we could see this VIX break out of this descending triangle, right? This triangle that we've kind of been putting in since, I mean, I could go all the way back to 2020, but I'll say at least around October of 2022, where we're finding some resistance on this white line here. I mean, we've hit it once, twice. This is the third time. I think we're getting to a point where if we test it again, we're probably going to break out of this. And if we don't, then maybe this market, you can't do TA for the VIX, and then we're just going to be in a place where maybe it's up only season forever. I don't think that's the scenario, but I do think that we are getting to this point where volatility is getting really tight and compressed. People are buying this as insurance. And then if something changes in the market where the market rallies, they're probably going to offload this, and maybe some people start to pick it up really cheap down here. So I'm going to be watching this like a hawk. We can talk about this next week too, but this is definitely one where if it gets that 50 moving average, that's where I'll probably enter that position just to have a little fun. I've been saying do less, but when I see opportunity given like this, where it's very similar to a setup we've seen in the past, let's see, something like this where you just coil up into towards the end. Look what happens. Explosive moves to the upside. Obviously, that's COVID, but we even go back here to 2017 into 2018, explosive, and we can go throughout all of history, very similar setups across the board. So I'm just a pattern guy on this one, but I think it's going to be really interesting. The other thing that I've been looking at is the SVIXY. This is something that's really interesting to me too, because last night I got an email saying that my puts got stock split. And it's like, why would you do a stock split right now with the VIX? It's either because people are buying the shit out of short positions and they're doing a reverse stock split in order to, they just do that from time to time for these ETFs. And that shows me that maybe there's a lot of people that are heavy kind of in this position. So that's another thing that I thought was really fun to look at this morning when I saw that it dropped completely, the price in half. So those stock splits usually come when you do see a market move. I'm not saying they know it's coming, but it tends to be whenever there is a stock split or something of that sort. The last time they did it, it went to the upside. This time, I don't know if it's going to go to the upside or not. So it's going to be very fun to see how that plays out the closer we get to the apex of that triangle.
Very fun indeed. Let's talk gold for a second. It is currently trading right at an all-time high, 2363 approximately. We've seen, it touched 2365, bounced off of that just a little bit, but it's continuing to run. Had a little pullback yesterday, but we see a bullish engulfing candle. Did I do that right?
Yeah, it's
am I
bullish
right about
engulfing.
that? Okay. So
Yeah.
we see it today. I mean, it's been a nice rip up. For the first time in a decade, Peter Schiff can take a victory lap. So congratulations to that old fuck. What are you seeing when you look at the chart for gold?
Gold is the most overcrowded trade, and I'll tell you why. It's because for the most part, when we look at gold, I mean, it's up a lot right now, but for the most part, this thing moves during the Asian hours. So whenever Japan and China's markets are open, that's when gold has been taking off for the most part. And then once it gets here, obviously people are buying it up because they're chasing the price up. Gold is something that is not I think it's people are taking it as a hedge against inflation. It's actually a terrible hedge against inflation. It hasn't started rallying until this year when inflation was at 22, not 22%. In 2022, when inflation was around 10%, gold wasn't doing anything. Now it's doing something now that inflation's coming down significantly. It's the uncertain trade. I will say that over and over again. And even though we are breaking above this historical line of resistance, on the weekly, it looks like we might get a close above it. The question is, can we stay above it, right? One close doesn't mean anything. If we get a bearish engulfing candle right after that, and then we start trading below this trend line once again on the weekly, then we're in a very different situation that I think a lot of people are anticipating. And it's I kind of have to go with this into what's going on in Asia too, because I think a lot of this is people in Asia, whether it's Chinese or Japanese markets that are buying this. The thing is, we're looking at both currencies in Asia absolutely getting devalued to the dollar. So as we can see here on the dollar, and I'm just pulling this in because it's all related. Dollar's having a great week. It's breaking above key level resistance, right? When we look at the strength of the dollar against, say, something like the yen, this is the highest it's been since 1990. The yen is the weakest it's been since 1990 against the dollar. The last time that we saw the yen in 1990, well, it was absolutely coming down because the equity market was coming down. So the strength was gaining against the US dollar because their entire equity market was falling to pieces. What happens if we get to a point where the Bank of Japan is just like, yo, we got to do something. We got to intervene soon. Does gold go with it? Do they sell that off in order to get dollars on hand? It's possible. It's very possible. And like I said before, a lot of Chinese money is in Japan right now after their equity market was taking a bit of a tumble there. What happens then if this starts to cause the equity market in Japan to drop? Well, then maybe they're flowing into gold. So there's a lot of things where people are just not sure how to move. And I think a lot of that is just kind of like, how can we protect ourselves right now? So people are very happy with how gold is shooting up. And it's I mean, Peter Schiff's been freaking, I don't know, that guy is just all hot and steamy from how much gold has moved up in the past like month or so. But at the end of the day, it's like, does this hold up in a crash? And the answer is no, it does not whatsoever. And again, I think you and I both assume that we're probably going to see some type of crash just because things are gotten extremely bad. It doesn't have to happen tomorrow, but it could happen over a period of time, either 2008 style or dot-com bubble style. But when we see gold in a crash, let's take it to 2008, you can see that from the height of 1038, it came all the way down to this 200 EMA at 687. Take that today. Say there's a crash today. Where would that put us? Around 1844. So, I mean, we could be very excited here, but then we look at the stochastic RSI, 100 and 100 for gold right there. And it's like, it's overbought. Can it keep being overbought? Sure. Look at the daily. 89 and 94. It looks like we have, and we're overextended over the 50 moving average. Something's got to be back tested for support. Maybe the mania goes on forever and I'm wrong, but I do think that if we're looking at this rationally, I think at some point gold's going to catch a lot of people off guard and probably going to see that sell off 5% to 6% days to the downside, maybe, consecutively. It's very possible for that scenario to happen.
Yeah, when the levee breaks. Let's talk crypto for a little bit. We have Bitcoin back over 70K, just kind of hanging out right there. BTC dominance has remained pretty steady in this 54 range. What exactly has caught your eye in the crypto markets, if anything? And it can be as simple as like, nothing's really happening. We got the halving coming up soon, blah, 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 blah. We can talk about Uniswap and the Wells notice there. I don't think there's been much fallout as far as prices go since that, but once again, it's continued attacks on crypto. What we got Bitcoin pulled up on the screen at the moment. Talk us through what you're seeing.
Yeah, so this is Bitcoin against USD on Coinbase, or this is actually Bitstamp. Son of a bitch, they did it to me again. Wrong one. All right, yeah, here we go. This is on Coinbase. Get the volumes there a little bit better here. But this is the pattern that we've been watching for the longest, right? Or at least for the past few days, maybe about a week or so. In this pattern, we're waiting to see if this breaks to the upside or the downside. I think we're going to get close to this apex. Once again, everything lines up for this April 20th date, this 19th to the 20th. This is where this would end. We'd probably have our answer whether we're moving up or down. I think it's more likely that we get a push to the upside with kind of this halving mania and the fact that we got the PPI data and there's no real bad data that's going to come out between now and then. Unless something absolutely catastrophic, black swan event happens, there's no reason bad news would come out to absolutely just destroy the price and bring it down to where it probably should be, right? It's probably going to push up a little bit higher from here. This is a bullish pattern. I can't say that it's not. It broke into it. It's going to break up from this, in my opinion. The question is, once it does break to the upside, what happens after that? Do we start to see some mass liquidation events? Possibly. If people don't remember, May is actually a pretty bad month. What was it? Was it May of 2022? Yeah, May of 2022. That was the bad month, right? That was, I think, 3 Arrows Capital, and then Was that also Terra Luna?
There
Terra
was
Luna was
like,
right around there.
yeah, and I think right after that was there's Voyager, there was
Yeah.
Celsius, there was all sorts of stuff between May and June that just absolutely beat the shit out of the market.
Absolutely. And then the year prior to that, we had a really big sell off in Bitcoin from what was it, 64K down to about 28.9 or something like that, too. So May is actually a pretty shitty month for crypto if we are looking at when it's overbought. I mean, 2022 it wasn't overbought when it dumped, but it dumped hard regardless. Obviously, Black Swan event given, but you're at this huge level of resistance here. Maybe we push up to that 75 level. Maybe we push up a little bit higher to like 78, 77. We can totally break out of this like we did here in November 2021. But that would mark the high. That would mark the high. And I think that since we have tested the bottom once and we are testing the top now, it is very likely that over the next year or so, there is a good chance we come down and maybe test this channel once again. That puts us around $20,000 or so. And again, this is a bear flag. Even if we're looking at this on the macro, maybe that means that we break down from this. I'm not saying that right now, but let's see how support and resistance holds. If this does hold up true, then support should be somewhere around here between 75 to 80K, I'll say. And then once we get through from that, it's likely that the next time we test this, we're going to be down here at 20 to 21,000. So I'm looking for one more push to the upside. I think it lines up with the halving. There's no bad news between now and then. Volumes are pretty low right here, so I think that this might be helped or aided a little bit by maybe some of our friends who have tons of stable coins out there. I'm not going to name names, but I do think that it's going to be that little tap there. People are going to get excited, over leveraged, and then we're probably going to come down to this 50 moving average. And if that doesn't hold, then we're probably going to see that level we talked about for a while, which is around 51 to 52,000, and that's a pretty big move. So let's say we get up here, come down to that. It's about a 30% move right after the halving. That could happen. I'm not saying it's going to, but it is something that is possible once we find resistance, if we find resistance up here on this thing. So we're going to keep an eye on that, see how that plays out. The dominance is still rising pretty significantly, right? We're at 54, 58. That's a good level. I think there's still room to the upside with that. The other thing I think I talked about yesterday too was total three. Obviously, the alts are very much far away in terms of total market cap away from their all-time high. The total market cap, not so much. I mean, that could definitely get there. It's going to be tough to add another $0.48 trillion, but I do think that's more likely that we get a double top here, not close to a double top, and then we don't see the same for the total or the total two, because of that, just how much money would have to flow into alts. I think if anything, money is going to be flowing into Bitcoin. Probably going to see the equity markets rally into next week as well, which would also offer a lot of people who are in some of these ETFs a good chance to see their bags get pumped right into OPEX. So kind of a scenario I'm kind of watching, hoping to see how it develops. But I do think that if Bitcoin rallies, it's probably rallying with TradFi. So we could see the two very correlated over the next week or so.
All right. Anything in the TradFi world that you're interested in right now, or you want to wrap this bad boy up?
Let's wrap it up with this tweet that you sent me, and I saw news about it yesterday too, but I didn't think they were actually going to do it. Let's pull it up from Unusual Whales. Jweb, tell me what this is about.
Whew, I mean, that's not a good sign when you're selling. So I'm from St. Louis. I believe that's the courthouse in St. Louis. I'm not 100%, but I think it is. Massive building downtown, and buying it for $205 million in 2006 and selling it for $3.5 million 18 years later does not seem like a very good return on investment.
Do you think they had to pay long-term capital gains tax? Nope. It's a fucking loss. Big old loss. At least they could write that one off for they could harvest that one.
I'm wondering how big of a loss. I mean, that's just crazy. 3.5 million today. Back then, I don't even know, man.
It's like going to a steakhouse. That's like going from like a Gibson steakhouse down to like a dollar store steak. The amount of money that you just absolutely lost and the value that's lost on holding something that long. This is a huge loss. This is 98% down from what they bought it at.
Those prices, yeah.
And think about this. They're willing to take that loss. Think about how many other buildings that have sold significantly lower. I think we talked about one in Chicago. It was like bought for 600 million, 5 or 6 years ago, and they sold it for like 15 mil. We're seeing a lot more of these buildings sell. There's one in New York too that sold for $1. Sold for $1, and obviously it's an over-the-counter deal. They
Dave and Buster should have bought that and turned it into the biggest D&B in the world. That would have been the play.
I mean, you got to do something with this. I mean, if let's put it this way: if you were some asshole who was willing to pay the property taxes on a building like this, and you had enough money, like you could just hold on to this for maybe 3 or 4 years, and you could flip that for significantly higher. 3.5 million. You could probably flip that for 5 to 6 times is what you paid for it. You just have to hold on to this stupid building for a period of time. But there's so much value that you could get from a $3.5 million fucking commercial real estate building if you have cash on hand, right? But this is just insane. It shows you the lengths that these companies, these banks are willing to go in order to save some face, save some money. And it's like, is this just the beginning? No banks have really collapsed yet. We got rumors of some that are getting close to it, but I mean, if they're selling this because they need capital that fast and they need it on hand soon, if this dollar rallies hard, I think we're going to see how short people really are in terms of cash reserves.
All right, that is going to do it for today's show. Appreciate everybody for joining us. If you have not yet, like, subscribe, drop some comments on there. All that good stuff is appreciated. Have an awesome rest of your day. Stay safe in the markets, and we'll see you next time.
Take care, everyone.